You, Julia, and just get your thoughts on the Aussie market section, Aussie market performance, particularly in contrast to the Hang Seng, which is once again just blown it out of the water.
It's a disappointing performance by the Aussie share market. In the first hour of trade, we didn't look too bad, and at one stage we were even up 4 points in the black, but with the miners all underwater today, mostly underwater today because of the fall in the iron ore and the oil price. Iron ore miners because of the fall in the oil price, as well as the China move to cut taxes for local miners for iron ore players. We saw the materials sector closing near the lows of the session. So as you can see from the intraday chart of the day, the Australian market also closing near the lows of the session. Stark contrast to performance around the region, especially the Hang Seng. Now, the Hang Seng yesterday had a fantastic day, huge amounts of volumes. In fact, a record-breaking session yesterday after coming back from a 3-day break. Today, it's followed it up with another stellar performance. The market up as much as 6.4% in today's session. It's currently up around about 3.3%. And the Chinese as well as the Hong Kong markets have been doing extremely well in 2015, and in fact in the last year. If we have a look at the Shanghai Composite, it's up 84% over the last 52 weeks. So unsurprising that we are seeing some of the exchange traded products which concentrate on China, the Hong Kong market, or even the BRICS nations doing quite well. We saw a 52-week high reached for IZZ, which is a China exchange traded product. It's up 51% over the past year. IHK, which is a Hong Kong focus ETP, is up by 36%, and IBK, which is a BRICS country focused one, is up by 22% over the past year. So unfortunately, the Australian market trailing a little bit behind. That's really because of our focus on materials and the energy space, but around the region, the Hang Seng doing phenomenally well today.
Julia, is it too late to get on the Asia bandwagon to buy some of these ETFs, buy some of these products? I mean, have they done the lion's share of the lift, or do you see further upside?
I think it really depends on your time frame. Usually the most bullish stage of an up market is the end stage, where you do see the most accelerated types of returns, and it does look like that's what we're seeing here in terms of the Chinese as well as the Hong Kong markets. Unfortunately, it's not unusual to see PE ratios around 200, so they are extremely elevated valuations over there, and it does look like it's a lot of hype which is seeing this buying frenzy which is happening at the moment. The Shanghai Composite is up quite significantly. Today it did have a down day, down about 0.8%. So it looks like a lot of those Chinese investors may be selling out of those strong profits from Chinese shares and perhaps switching into Hong Kong shares. If we have a look at the China Securities Journal, there was actually an article published with the headline, "Go exclamation mark buy Hong Kong securities," and it's been seen as maybe a push by the Chinese government to encourage the buying of stocks in Hong Kong as well. So a bit of a buying frenzy in that region. For longer term investors, we know how this story plays out. However, for shorter term investors, usually it's the end of that massive bull market which has the biggest and the most accelerated returns.
Have you been on board? Are looking at the local market and struggling to find, you know, a deep value at the moment among some of the big names, and so are maybe looking further offshore to the likes of the Hang Seng, to China sort of ETFs, to Europe for gains?
I think Australian investors have been looking offshore for a while, and that's why some of those international money managers like Henderson, like Magellan Financial Group, Platinum Asset Management, which came out with funds under management for the month today, have been doing so well because there is an international focus. So Australian investors should be diversified, and in particular I would be looking at those regions which are looking at quantitative easing, because as we have seen from the US example, as we have seen from the Japanese example, those are countries' economy which do undertake quantitative easing generally tend to support asset prices, in particular the market. So we have seen that with Europe as well, and the exchange traded product for Europe is IEU. So the European market is expected to outperform. The German DAX is just an example of that, where we are seeing it reaching multi-year highs at the moment. So I think investors do need to be well diversified. The Shanghai market is running quite hot at the moment, so probably a little bit more cautious when you are seeing PE ratios around that 200 mark, because all that means is that you're paying a premium now for future profitability. And if I see PE ratios like that, I want to see growth of about 250% over the next couple of years. So you want to make sure that's well achievable.
Julia, no one's mentioned the US yet as one of the places to get into.
That's because the US, I think, is a little bit of a scary place. The last few years, the US has been on a fantastic ride on the back of quantitative easing and on the back of the very low currency, but we are starting to see a reversal of that massive macro trend that we've seen throughout the last couple of years. So the US coming closer and closer, I think, to an inflection point. So a lot of nervousness in terms of what that means. A lot of the companies in the S&P 500, although they're US based, derive a lot of revenue from offshore. So that lower US currency over the last few years has been an absolute godsend for the S&P 500 in terms of the earnings picture and in terms of the health of these businesses. With a reversal of that US dollar trend, we're now going to see that US dollar being a headwind for a lot of these companies. So perhaps US companies have reached peak profitability. So from a fundamental side, there's a big question mark in terms of whether the earnings cycle in the US is starting to turn, and the US earnings season has just been kicked off with Alcoa reporting results. So that's going to be an important clue on where we are in terms of that US earnings cycle. So the US, it's had quantitative easing, it's had asset prices being helped along. I think now it's Europe's turn, now it's Japan's turn.